So for the purpose of everybody on the chat, my name is Nurhan. I'm a board investment advisor, and I'm going to be moderating the session today. You can obviously see all the speakers with us on the screen this morning. And as you would expect, you can post any of your questions on the chat and we'll take them up in the Q&A session. And Kauthar from Fintech Robo is going to support us as well. Obviously, first, thank you to all the speakers for being with us this morning and to Fintech Robos for arranging this beautiful webinar. I want to start by introducing our speakers. Obviously, we've got 5 of the let's say the gurus of robo advisory across the world. So I want to introduce the first lady with us on the panel, Miss Marie Berrière. She's the head of the Investor Research Center at Amundi Institute. We also have Mr. Michel Ferrero, the co-founder and the CEO of Stashaway, Mr. Mehdi El Amin, founder and CEO of Finamaze, Mr. Omar Sheikh, founder and CEO of Coco Invest, and Saad bin Atyan, the founder of Madkhool from Saudi Arabia. So, ladies and gentlemen, I'm pleased to be with you here this morning, and I'm really looking forward to a rich and informative discussion. Of course, before the world started all the discussions around cryptocurrencies and more recently on non-fungible tokens or NFTs, the fintech world was buzzing around robo advisors and the impact that they would have on traditional banking and on investment advisory services. We've seen a huge boost in the assets under management of the robo advisories. We're looking at around $2 trillion, with some of the largest players being in this field, whether we're speaking about Vanguard, Schwab, or Betterment. And I've been doing my research. The research report says that we're expecting an upward trajectory of growth with a compounded average growth rate of around 15% by 2026. Now, obviously, when COVID-19 hit, we saw kind of like a break in the market where we're seeing a lot of people moving on to online work and online banking services and so on. But we've also seen a couple of discussions saying, will we really see the market shift towards robo-advisory, or are we going to see people want to go back to kind of safe traditional banking as you would expect because of everything that's happening on capital markets and the financial markets and so on? So if you will, today's discussion, I want to capitalize on the great minds that I have here, and I want to build the ground for the audience to really understand what do we expect to happen on the robo-advisory field. We're going to start off with the question, which I think is the most pressing one. And my question really to the panel is robo-advising still the next game-changing innovation in the investment world, or is it running out of steam? With that, I'd like to start with Ms. Marie, if she's happy to give us an international lens on that question.
Thank you very much, Norani. I think it's a great question. It's probably, as you say, the most important one. And I would answer yes, Robo Advisors can be a game changer. I'm quite enthusiastic about this new technology. And the reason why it can be a game changer is that I think it brings 3 great advantages. The first is accessibility. Robo advising tools can be accessible to anyone, any client. That's very important, also at any time. The second is the possibility to customize to individuals' needs. People are all different. We all need a different optimal portfolio, and this possibility to customize to the needs is very important. And the last thing that Robo Advisors are bringing is interactions, the possibility to interact flexibly between the robot interface and the client is something also new that is not possible with human advice. So if we come back to the need of financial advice in general and being human or robo, I think it's very important to recognize that there is a key need for financial advice. Why? Because individuals are not well equipped to take financial decisions that are very complex. And when you look at the academic literature on these questions, monitoring how people invest, you see numerous biases. People under diversify, they hold very low equity exposure, they have various biases like home bias, etc. Also, they have limited time and attention to dedicate to their portfolio. It's also funny to see that people monitor their portfolio much more in rising markets. That's what is called the ostrich effect. We like looking at portfolio when things go right, but when things go wrong and maybe there is a need to rebalance, it's much more difficult to have a look at your portfolio because that's quite harmful, right? And in particular, people with low financial literacy, they are more subject to these biases. So financial advice is key, but there are very important flaws in human advice. First, it is very costly. And for that reason, there is no widespread access. Not everyone can have access to a human advisor with a high quality of advice. There are also some proofs that there can be some unfair clients treatment. There are some academic papers showing that, for example, women, young people are not very well treated by human advisors. They ask them less about their financial situation, their retirement needs, etc. So that's very important bias. So in that context, robo tools, so digital tools, they can really offer a possibility to democratize the advice and reduce all these biases by reducing the cost and offering the possibility to everyone to get this possibility to get an advice. And they bring key benefits. And in that, I would like to talk just 1 minute about our experiment or experience at Amundi, because we introduced a Robo Advisors on employee savings plans. And we measured, so I worked with an academic professor at the Toulouse School of Economics on really an experiment to measure how much did this introduction of the Robo Advisor change investors' behavior? How much did that change the behavior and did that improve people's situation? And we found really very good results of that are linked to the introduction of the Robo Advisor. First, Robo Advisor encouraged saving. People saved a little bit more with the Robo Advisor than without. Second, they improved their investment decisions through two main channels. First, they diversified better and they increased their equity exposure, something they would not be able to do by their own. Very difficult to increase your exposure. And the second source of improvement was through active rebalancing. People left on their own, they do not rebalance. Like they sleep on their portfolio, they let their portfolio drift, they do not rebalance. Here they were receiving alerts telling them, look, your portfolio is deviating from the target, you should rebalance. And they were doing that. They were following the advice and rebalancing. And all that led to a very strong improvement in performance that we measured about 3% per year. So that's, I think, something important. And just the last thing I would like to mention about our experiment is that we also found that it had an impact on financial inclusion. People that were less wealthy, they were more impacted by the robo advice. So they had the greatest improvement in equity exposure, in performance. So this democratization role that I was mentioning is very important. And that's something that we found also in practice.
Thank you so much for that, Marie. Michelle Marie raised a couple of really interesting points. So we heard her speak about inclusion, democratization, like a preferable performance because the robo advisory takes care of the kind of alerts and so on. I've heard her also speak about financial literacy and how that can be a barrier to investors. So again, I'm conscious that Marie is sharing an international lens and an academic, almost research edge to this. So on the ground, being the CEO of Stashaway, how do you see the robo advisory scene? Is there still meat in that scene?
Yeah, so thank you for having me, first of all. And so just a quick background so that everybody knows where I'm coming from. Stashaway is the leading robo advisor or digital wealth manager in Singapore, Malaysia, Thailand, Hong Kong, and the UAE. So we just, the Dubai and the UAE has been a market we launched recently, and the MENA region has been a region that we launched recently. So my perspective will obviously, I'll try to give you also a MENA perspective, but also will include things that I've seen in Southeast Asia for the last around 5 years. We launched 5 years ago in Singapore. We were the first one to launch here. And we manage more than $1 billion US. We've been quite successful in this region. Now, I agree with Marie. So to your main question, will I'll use your wording. So you say, will Robo Advisor are they here to stay? My answer is a quick yes. Now, to be more precise, though, the way I think about it is, if you ask me 5 years from now or 10 years from now, do you think people will spend more time than today with a human financial advisor, or less time than today with a human financial advisor? And secondly, will people that today do not have access to any type of advice will have access to advice through Robo Advisor? My answer is yes to both questions. So the first one is, people will spend less time with human advisors because this will move more and more online, 5, 10 years from now, pick a time frame. And as Marie mentioned, there is a number of people that do not have access, either because they can't afford it or because that they don't think about it, to advice, that actually will be able to get advice and get kind of a better, I say, financial and investment advice from a digital wealth manager. I don't like the term Robo Advisor too much, but anyway, Robo Advisor, let's call it, using your terminology. So I think there is no doubts about it. And I agree with what Marie mentioned, that some of the advantages are the fact that it enables people to that might not be as financial literate as as people that have studied finance, to actually get access to really professionally managed investment portfolios. One thing that we have done, for instance, from the very beginning, you're asking me about actual on-the-ground experience. Because of this, one thing that we've done a lot of is actually investing in education. So, for instance, we have something called Statutory Academy, which is actually a free part of our app, where we have, we explain to people from basic concepts like what is compounding, or or how do you think about what is actually, we explain what is equity, what are bonds. Two, we actually also have very kind of a more sophisticated modules that talk about asset allocation, and why is asset allocation important, and how do you think about asset allocation, and how do you what is model portfolio theory, why do you want to look at the economy, etc., etc. So we also kind of go quite advanced, and that's been very important for people, for our clients, because it's an area where it's an easy way to get some further knowledge. And our belief is that these are non-commercial educational snippets, so it's actually real knowledge. And our belief is that the more people understand, the more people will use services like ours, which they actually expose people what we believe is the right thing to do. So education, definitely super important. I agree with Marie that the digital players can extend the reach of financial advice by enabling people that usually do not have access to it even further. To be honest, in our region, we actually were initially surprised by the fact that 20% of our assets actually come from high net worth individuals. So we actually have a very significant part of high net worth individuals that decide to invest with us. And at the beginning, we were a bit surprised, because we thought that our target was going to be what the banks call mass affluent, people that have somewhere between 100,000 and a couple of $1 million. But actually, we saw people, so we have people with $10 million account with us, and we saw people with kind of very significant portfolios invested with us. And so we started asking them, and what we realized is that even for people that can afford financial advice, two things happen. One is that, and I apologize for being very open and frank, one is that a lot of the banks, or in many cases, banks have their own interest at heart more than the client's interest. And so there is a lot of, and I think Marie mentioned a kind of a unfair treatment and mis-selling. And that happens actually across the chain, even when you go higher in wealth. And fees tend to be very significant, you see in our region, you see unit trust mutual funds being sold with 2.5% entry fees, or you see structure notes with very unclear risk rewards profile being sold to many customers. And so a lot of people, even wealthier, are actually looking for alternatives. So that's kind of one reason. The other reason is that a lot of people prefer to be able to do everything from their phone 24/7, then to have to go to the bank, get a coffee with your advisor, sign a few papers, and then call, etc., etc. So there's just a preference. And especially when you talk about younger wealthy people, so 35 years old wealthy person, there is a very high chances that that person will prefer to do everything from their phone than actually meeting an advisor in person. Obviously, if you talk to a 65-year-old person, the likelihood is that that person would prefer to meet a financial advisor in person. But so I think it's more driven by digital propensity, and age is a good proxy for it, than by wealth. And that's that's another maybe surprising thing that in the early days now I kind of understand and can talk about.
That's really a couple of very interesting points that you built up on Marie's case, Michelle, because I heard you speak about education initially and the free educational resources that are available. But then I heard you also share stuff around trends and age and that kind of a digital move towards wanting an online access, which was a very interesting thing. And you actually may have responded to one of the comments in the chat when people were saying in the chat, some of the guests are saying that mix is essential because, again, preference could be convenience, but preference to someone else could be human contact. So again, thank you for raising the points, particularly around convenience. And if you are happy to share with us on the chat the availability of the free educational resources, maybe someone might find them useful. Omar, I want to move over to you. And I'm conscious that every time I want to move on to a Sharia or Islamic twist, I'm going to come over to your side. And I know that Coco Invest is the only Robo Advisor which is Sharia compliant in the Kingdom of Bahrain. So I wanted to hear your views from a Sharia perspective, perhaps, on do we still see that being a market for investors who are Sharia conscious or Islamically conscious, if I will?
Thank you for moving across to me, and great to be here today. So to give context, it's a great introduction. Coco Invest. I also don't like Robo Advisor, digital wealth manager. I think is a better term, and we are one of the very few out there, and it is within the subset of Robo Advisory. It is almost a niche within itself. The features are in some cases quite different if you look at the underlying elements that what you can invest in, but at the same time there's obviously a huge sharing of themes, and touching on what we've already spoken about is really the transparency, the accessibility, the affordability. But I think the contrast is even more stark when we're talking about Islamic compliant investments. One of the reasons is, really the whole subset has been very difficult to access for retail investors, and high quality product is in general inaccessible for retail investors. So what we're seeing is that particularly with our solution, is there's a huge take up from first-time investors as well as seasoned investors, but particularly the under 35-year age range who have never actually invested before, and they have a digital-first mentality, where whatever problem it is in their life, or they're looking for a solution, they tend to sort of move initially straight towards a digital solution or seek out a digital solution. So when you're talking about robo advisory, I think it's important as well to sort of understand that the industry as a whole is evolving, and those providers within this space, whether it's a Sharia compliant or traditional provider, we're in competition. And we are looking to constantly evolve. Our consumers will inevitably, as time goes on, also demand more sophisticated solutions. So some of the areas that are really interesting for us is really the use of open banking and how we can integrate that into consumers' lives to offer them better solutions. But when we're looking at it, we're looking at an industry that needs to build trust and awareness, and it is one of the key factors in the success of the industry is the ability to evoke that trust and awareness. And I think traditionally that the Islamic compliance sector, it's much more in an infancy stage compared to your towards the international landscape. We're talking a subsector that is more or less 50 years old, in contrast. So it's in a different stage of life cycle, and that's what we've seen. And So, why is there, a difference in the growth versus international? I think, as I say, it's this this environment where the awareness has to be brought up, but also in a region where there is a much higher proportion of unbanked as a population. So, where in Europe you're looking at sort of like 92, 90, 91, 92%. In this contrast, we're looking at a region which is around about, mid 40s. So there's a lot of ground to catch up, but that's a good thing, because in a way, Robo Advisors can help leapfrog this market by offering more than just a pure Robo Advisory solution as time goes on. And we're certainly investing very, very heavily in providing a platform for a lot of financial services, not just wealth management. Right. So it allows a consumer who maybe never had a bank account before to all of a sudden have the best of the best, a very, very good service where the chances of mis-selling and bias really is taken out of the equation, and where a consumer will not necessarily be a financial expert, but can actually access, in terms of Islamic compliant particularly, very, very high quality financial solutions, which actually require a much deeper understanding, not only of banking and financial markets, but also underlying managers. So straight away, for not the same cost, they actually get access to something that otherwise they haven't been able to access at all.
Wonderful. Omar, thank you so much for giving us that twist. I mean, of 5 speakers, 3 of which think Robo Advisors are definitely here to stay. And in fact, Omar thinks they're going to be more than just advisors. They're going to be offering more, which I'm going to take your idea and park it with me, because you're actually bringing me to think of very solid competition for banks. So I'll make sure I cover that grounds a little bit later as well. So Mehdi, if I can move over to you, we have established a ground that's very strong around awareness and education. We're establishing another track introduced by Omar around expansion of services. And of course, Omar, also, you mentioned a very interesting point around trust, which responds to one of the chat's messages that we got from Dino Sukaj, who mentioned that trusting a machine is something that people would have to work with. So we'll also address the trust element more deeply. But Mehdi, what about your contributions? I know that your company is on ground in the UAE. Do you feel like advisors are also here to stay, or would we have a different view from you?
Yes, thank you very much, Nurhan. Indeed, Finamaze is a digital wealth.
Apologies, Mehdi, we can't see you. If you'd like to turn on your camera.
It's turned on.
Okay, I personally cannot see you.
Can you see?
Is everybody else able to see Mehdi? Then maybe it's just an issue from my side.
Afraid not.
It's frozen.
Ah.
Okay.
All right. Okay, so why wouldn't you direct the question to Saad while I'll try to reconnect?
Okay, I will do that, and then we'll wait for you to come back. Saad, everybody on the chat here with us today on the webinar, we've got Miss Marie from the academic background, and the gentlemen are kind of on ground practice. We have you and your company from Saudi Arabia, so the heart of the GCC, and looking at the sandboxing arena. So we understand that your company is still in that arena. So from someone who's about to get into the market and been working on that for a couple of years, what is your viewpoint on that aspect?
So thank you very much. Thank you for having me here. So Madhoul is really a startup company that's in the sandbox now. We have been working in this venture for about 2 years now, and we're excited about the market in Saudi Arabia. I think the overall positive view on the Robo Advisory, it's very clear. I see them, and I agree with all the audience here, Omar, Michelle, Mary, that the industry is really looking for technology and they're looking for automation. So the industry is really moving towards the technology, the accessibility, the affordability, and reachability. If you think about the kingdom has a population of about 35 million, right? So out of which 65 of those people are younger generation. They're millennials. They're between the age of 20 to 35. And very important statistics is that in Saudi Arabia, particularly, people are adapting technology. I think we are one of the top, if I remember correctly. Number two in terms of internet fastness, 5G, and also in terms of smartphone penetration rate. Almost every individual in the Kingdom of Saudi Arabia has 1.5 smartphone device that they're using. What that tells you is that people are desperate for apps. People are desperate for technology. People are desperate to really get the eases and the convenience of investing in one click. And very important statistics in the region, or specifically in the Kingdom of Saudi Arabia, people are highly, they have a lack of financial awareness. So what we think is the market in Saudi Arabia is really very attractive. It's very green. We believe that there is a great opportunity in terms of automation. If we look at the, for example, if you look at the banking sector in Saudi Arabia, look at just the amount of liquidity that's sitting in the demand deposit, which is actually free for the banks, which is in the retail side, that tells you that the market in Saudi Arabia is huge. So we're really positive about it. We think it's in the region, although there is still a lot of things to go from an ecosystem perspective and in terms of completeness, but overall, I think we're very positive. But however, I do think Robo Advisor will not entirely replace human advisors. There must be a human element in the process, and we have seen it in the region. We have seen it particularly in the MENA region. People have high emotional reaction when it comes to their financials, so they would like some human element in the process. So I do think robo and technology will take place, but they will not replace a human completely. There must be human element in the process, and that's kind of where things, I think, will lean out in the future.
Thank you so much, Saad. Obviously, you raised the points that are very Saudi specific. For anybody who's read the Saudi Vision 2030 or attended the technology conference that they had a couple of weeks ago, it's a massive and it's a huge market. We totally understand. And the underbanked and unbanked statistics, though, in Saudi as well say that there is work to be done on the literacy aspect for Robo Advisors or for any other investment firms to really have a footprint. So I totally do agree with you. I just wanted to highlight a very interesting point that you raised, which was around the availability of liquidity. So there is capital to be deployed. And that is the interesting part that generally is the vibe around the Saudi Arabian market, more particularly and specifically. So thank you for your contributions. I'm not sure if Mehdi is here, so he can share his views.
I am here. Can you see me now?
Personally, I cannot, but I can hear you.
Yeah, we can see.
Yes,
we can see you.
Yes, Mehdi, we can see you.
مهدي المنتظر صح؟
Just to kind of build you up, because you were off for a couple of minutes, we covered the international lens. We took a look at the regional scope. Everybody on the panel is super pro Robo Advisory. So I'm actually hoping that my audience is going to pick up a debate on this, if they would, because we've got quite a decent number of people. If anybody disagrees, my panelists have opened up to a debate. So feel free to post any debate points. But Mehdi, as kind of closing comments on this question, anything that you think you'd like to share that is different than what the other speakers have attended to?
Yeah, sure. So first and foremost, what we can say is that when it comes to personal investments, I think that the brokers globally, but also regionally, have taken a decent part of the market share. This is due to the fact that between 2011 and 2021, anybody who would have invested and bought almost any security, any ETF on the market would have seen a very good performance. And therefore, a lot of retail investors got the impression that actually they know it all, and that it's great to basically just invest through brokers and get a head on what to invest and where to invest and make these minute decisions. But now in 2022, and with the recent drop in the market that everybody has noticed, the Nasdaq is almost lost a quarter of its value year to date. What we see is that this trend is being questioned by retail investors, and here they are looking for other ways of doing it, other ways to invest. And what works is some active asset management, but for the most part, these people or wealth manager, they have got the minimum account that needs to be opened for the private banks above $1 million, which is obviously something that not everybody is able or willing to dedicate. So I think that the digital asset management or the robo advisors is something that will get even more weight when it comes to the personal investments of the different clients, because of this reason, but also because, as everybody has said, not everybody has got the expertise, the time, and access to all different elements. What I can say is that, though, robo advisors will not be in the way that they are today. They will evolve, and this evolution will come in sync with what the client requests. And also, the 100% total robo advisor might not be something of the future, or at least not in the foreseeable future. Let me explain myself. So we at FindAmaze, we opt for the hybrid solution, whereby we let human beings, our investment committee, take the strategic decisions of the investments. Okay. And they would do it at a high level. Now, where the machine beat us, we human beings, is the fact that it can calculate very fast. It is emotionless, it applies, and it is able to detect signals that we human beings cannot do. So in my opinion, the future of robo advisory, and I would say even the future of asset management, and here I'm including the big funds, I'm even including the big banks, is that this asset management has to integrate part of the automation, part of the AI, while at the same time keep interesting the human experts, the human specialists with the strategic decisions, and let the machine do the tactical decisions. That's on the one hand. And on the other hand, and this is how we came into how FindAmaze moved from an idea into a real business, is that we figure out from our experience working for the global banks and private banking, is that when you come to a major private bank with a total portfolio of $30 million, for example, you are an ultra high net worth. Then they will make you sit with the specialist asset manager who will manage your portfolio and who will be specialist on the US markets, Steve. And then you will have somebody else, Carlos, who will be specialized of the emerging funds. And then you will have somebody else who will work with you on your overall allocation. You will have a fixed income specialist, and you will have a private equity specialist as well. But these different elements of asset allocation on the one hand, but also on the personalization of each portfolio, this is something that is available only to the ultra high net worth individuals. What we try to solve for is to bring this to the people who are willing to invest 10,000, 100,000, or 500,000 US dollars. And this is something that has been achieved because of the collaboration between Team A, which is the human strategic investment managers, and TB, which is the sum of all the AIs and algorithms that are within our machine. And finally, and perhaps this is also an element that I would like to put on the table here, is that, of course, we all know the 80-20, the 60-40, and the 40-60 asset management, whereby our investors will be split between a fair share of stock markets and other share to fixed income, and depending on the risk profile, they will be sitting in one portfolio, 80-20, or another one which is 60-40, etc. What we believe as well is that what robo advisors can bring to the table, and we have done an extremely great work at it at FindAmaze, is to divorce from this vision of splitting investments between fixed income and stock markets. but to look at it from the pure volatility perspective. Here I'm referring to something that everybody knows, is that fixed income, of course, are less volatile and less risky than stock markets, right? But this is the case for the long term. When you look in the short term, look at 2022, for example, the volatility of the fixed income was very high. Why? Because the rates were going up and down, and therefore the bond market was going up and down. And somebody who was deemed to be a prudent person, a prudent investor, would have been stuck in a portfolio which majority of which will be fixed income, and would have suffered some volatility. So another way of how the Robo Advisor or digital wealth manager can bring value and add value to someone's portfolio is to look at the volatility as it is happening and propose alternatives and actively manage and rebalance towards securities that are less volatile or bring more value. Example, Nasdaq lost 25% year to date. We have built a portfolio called inflation protection that has done plus 25% year to date. This portfolio today is available only for the ultra high net worth individuals and in hedge funds where they do long short strategies, etc. We can bring these strategies at a much lower level, and we can put in them risk controls, not general risk controls for all the clients, but a risk control personalized for each single client, for each of his single portfolios. And this is achievable because of the automation that today's technology is putting in the hands of the human asset manager in order to bring the best of both worlds to the clients.
Thank you so much, Mehdi, for that. I think with all your help in the panel, we managed to build the ground for this discussion. And I have a couple of really important, very specific topics that I would like to cover with you going forward. And I also have to let you know that although the first kind of energy from everybody on the panel today was very pro-Robo Advisory, there was a couple of comments on the chat that came around, trust that came around. Are Robo Advisors really going to be sensitive to pick up someone's pension requirements, or if they were trying to get their children to get married or to get educated? It's not, I mean, we heard Mehdi speak about customization, but the points that were raised on the chat were very valid, especially to this side of the world, where pensions, education, wedding spendings are very personal. So how do we achieve that with an automated Robo Advisor? Again, this will be a point that I will raise. I will just leave it with you to park it, to think about, bearing in mind that I want to address particular cultural respects, because that's very kind of Middle Eastern, if you will. So if I then jump on to another point, I know we build the ground, everybody's super positive on Robo Advisory because of the technology and all of that. But when we took a look at it, and when I was really researching it, I found a ton of research on this. And we see that in the Middle East, North Africa, in the MENA region, we're looking at an asset under management expected by 2023 to reach around 3.8 billion. Now, I'm not saying the 3.8 billion is a small number, but for a market that's in trillions of dollars in other areas of the world, it looks pretty small compared to the general scheme of things. So my question then really comes in to say, why do you think, from your perspective, that the AUM for Robo Advisors on this side of the world is kind of this kind of at this level compared to international levels, right? And Michelle, I wanted to start over with you, if you're happy to share. I'm conscious, of course, the regions that your company has worked in, but if you have a view on why it's not progressing in terms of AUM as fast as the rest of the world.
I think it's progress. I don't have hard data, to be honest, but my sense is that it's the MENA region is progressing as fast. So if we look at speed, is as fast as other parts of the world. It's just much later. In the US, it started 10 years ago. In the MENA region, it's starting now, or it's very recent. The same, Southeast Asia is maybe a little bit ahead because we started 4.5 years ago. And so, but I don't think that there's a speed reason. It's simply that things have started a bit later. And perhaps, depending on the markets, of course, there are some markets where also perhaps financial literacy is even lower than in, if you compare to the US, I think it's always difficult to compare to the US because the US is a very peculiar market from what concerns individuals investing. Because everybody, you turn on any channel on the TV and they're talking about the stock market.
It's very interesting. It's a very interesting choice of word, which is why I smiled. It's the word peculiar was a very interesting thing.
No, because literally in the US, you turn on the TV, any channel, and there is somebody talking about the stock market, and I think that's the only place in the world where that happens. What that means is that there is a very widespread financial literacy, also because people are always individually responsible for their own pension, because also the 401k system makes sure that people are somewhat responsible individually, which is not the case in many other parts of the world, where the pension system is either provided by the government or by companies, and so there is more kind of hand-holding. So I think that also, depending on the country, in the MENA region, I guess, there are some places where maybe on financial literacy is lower than obviously in the US for sure, but also than other regions of the world, and that may actually delay a little bit the adoption. I think though, as I mentioned, that I don't think the trend is going to be different. I think the trend and the speed is going to be very similar. It's simply that the starting point is later. And maybe the starting point so maybe the other angle is that when you look at, which I think is where the opportunity is, to be honest, when you look at financial assets or financial wealth of individuals, and you look at it, let's use the US as a benchmark. In the US, 14%, 1/4 of individual, like households' financial wealth is in cash. The remaining is invested in something, 14%, 1/4. In our region, so Southeast Asia, Middle East, the number is 40% or above. What that tells you is that a lot of people don't, just leave the money in the bank accounts doing nothing, which is linked to financial literacy, as I mentioned earlier. And even for people that invest, there is a lot of people that kind of are, I think Marie was talking about equity exposure earlier. A lot of people that have a much lower equity exposure than they should have. Equity, and in this case, even bonds exposure that they should have. And these are things that I think digital wealth managers or Robo Advisors can actually help solve. I think this is a great opportunity. And this is, I think, a reason why I'm extremely bullish on the potential success of players like Stashaway and others on the call in these regions, because I think the opportunity is actually much larger than it is in the US because of the starting point.
Beautiful. Michelle, I'm also conscious on the bullish vibe, and I know that this is something that I expected really from the call. I'm conscious on the cultural aspects that are being raised, and I know that now you told me it's not a matter of will we get there in terms of size. It's just that we started a little bit later on this side of the world. But again, every single comment that gets posted is one that is linked in a way to kind of cultural aspects. So I'll make sure we kind of revisit these thoughts with a cultural mindset in a few minutes. Marie, if I can move over to you when it comes to the exact same question. And I know maybe you wanted to give us an international lens, you wanted to focus on the region, but I just wanted to see briefly from your side on the assets under management in the region.
Yes, thank you, Noran. Yes, you seem to be disappointed by the growth in assets in MENA region, but I would say that many countries would make the same assessment, right? We were disappointed, I think, by the growth of AUM in most countries. But and that raises a point of trust, right? That was made also by some people in the chat, which I think is very important. So for me, if we want the market to grow even further, it's mainly a question of raising the possibility to increase that trust in the algorithm, in the robo advising tools. So it's crucial for robo advisors because they rely on algorithm in different parts of their process. For the profiling of the clients, where you need an algorithm based on a questionnaire, and then for the optimal asset allocation definition, which also relies on another type of algorithm. And we know that there is what we call algorithmic aversion. So this has been mentioned already. There is a general lack of trust in algorithm in the population. It's funny because there was a recent survey made on that question. And for example, 19% of the respondents worldwide said that they would trust a robo advisor to guide their investment. So it's relatively low. Huh? And funnily, they say that these same respondents say that 9% of them say they would trust an horoscope to guide their investments. So we have to put these figures in the comparison. There is a cultural dimension to that. You're right, Nouran, that was raised as well. For example, trust in technology and algorithm is much higher in Asian countries. In Asia, in India, in China, for example, it's much higher than in other countries. So that's a very important point. And this algorithmic aversion is particularly problematic for people who have lower financial capabilities. These people also typically also have higher algorithmic aversion. So then the main question is how to increase trust. And for me, there are two ways. The first is explainability, and the second is to give control. Explainability means bringing more insights on the way the algorithm is working. So to give explanation to people on how it works, to reinsure on the functioning. That's something that is very important. Regulators are well aware on that, start to ask about that. And the second was raised by Mehdi, and he mentioned that in the functioning of his algorithm as well. And I think it's very important. That's also a feature we designed in Amundi's Robo Advisor. Giving people control is very important to build trust. There were experiments made by academics on that. When you propose people to use an algorithm, even a professional forecaster, for example, and you give no control over the algorithm, people are very reluctant to use that because they feel they will not be responsible, they will not be able to modify the output, etc. If you give control, if you tell them, look, you can, in the end, you will be the ultimate decision maker. You will make the choice. You can change the decision if you're not happy with that. People are much more likely to use the algorithm. So I'm very happy Mehdi mentioned that they decided to implement that for strategic decision. At Amundi, we did that for all decisions. So we went even one step further. So the reallocations, all the rebalancing decisions that have to be made, you get an alert, the robot proposes, but the client chooses. So if he's not willing to implement the robo advice, he can do that. So I think that's something very important. Explainability and control can help building trust. And also some people in the chat mentioned that reintroducing human advisors can build trust. If you know you can call someone, if something is not going well, if you can ask for explanation with a human advisor, of course it has a cost, but that's something that is also able to build more trust, I think.
Marie, you raised a couple of really interesting points. And every time you were speaking about the element of control, the first thing that comes to my mind is people would want to know how to exit if they wanted to exit and how quick they can cash it back. Because to Michelle's point, cash is king in this side of the world, if I speak on behalf of this side of the world. But like more generally, it is cash is king, right? So they want to know if they wanted to get their cash back, how soon, how quick, what sort of control they have. And I really think in terms of Robo Advisors, that's a very important point, because if people don't trust that they can get their money back, they lose trust in the system, if that's a fair comment to suggest. Now, again, I just want to take a quick round briefly on inputs from the rest of the speakers, because there's a little bit of really interesting discussions around the corner because of the comments that just gave me a couple ideas. But Omar, if I can come over to you, and you can share with me your views around speed, around are we getting there on AUM levels? Do you think we're just going to be slow? But is it a rabbit and fox kind of a scenario? What is it?
So I think it really comes down to the life cycle. I think we absolutely will get there, and I think actually I share some of the sentiments said today. I actually think some of the potential here is actually far higher within the region than say more mature markets. We're looking at a population where the vast majority are under 35 years of age, and they're just coming into the age group where they have assets to invest. Now, Long-Term Solutions, Cocoa, we can set up portfolios with $100, and that just really hasn't existed before. So we're having a population that is really just at the beginning of their financial life, and they've got the ability to interact how they expect to interact with the financial universe, with the financial industry. Will we get there? I absolutely do believe we will. But maybe not for some of the reasons that is so obvious. We have a product proposition, and in the fintech world, it's very easy to sort of end up in a bubble. You know, all fintech CEOs are in some respect always operating in a bubble, and you think the world of your product, of course. But it needs to be remembered that the normal retail investor isn't thinking about fintech all day, every day. We do, we probably dream it, but the average person doesn't. So a Robo Advisor or any fintech has to add value to consumers. And until a consumer sees a value, it doesn't matter how good this product is. It has to do something for people, and it has to do something in a better way. Now, one of the issues is when it's a less mature market, there is always this confidence level, because you haven't got a number of peers that have interacted with products to that level. And I think this is where I personally put a lot of emphasis on correct regulation. I think that is absolutely key to the environment and to how the evolution will work. Correct regulation with the correct fintech or robo advisors who are sophisticated and knowledgeable about regulation and have a positive view about regulation work incredibly well together, because it creates an environment of increased confidence in the marketplace, and that's where we'll have a much higher tick up. And I actually are of the thought that, you know, we're seeing the smart fintechs are understanding it's fintech 2.0 that really counts. Right. So we're sort of laying the grounds here. And although if you compare it to a completely different market, say in Europe, I'm sitting in Northern Europe at the moment, they look starkly very, very different, but it's for different reasons. And I think, you know, what we'll see is the uptick will be quite dramatic once the general acceptance and knowledge and awareness of these solutions transpires. People tend to be also very hesitant. I mean, we've noticed a lot of our first-time investors and new investors tend to dip their toe in very gingerly, very quiet. They don't make their large allocation on day one, and that's very normal. There is this, you know, no matter how much a consumer loves what you're doing, quite reasonably, there will be a level of hesitation. And, you know, we see very small accounts started. And then once confidence grows, we tend to see quite a dramatic uptick, actually. When they are confident, they know they can get the money back, we are correctly regulated. And, you know, and I expect that theme really as a mass perspective to continue, where we see, and, you know, touching on an element that was already said as well, is that actually we also see robo advisory both in the West and I expect this in the region, where for the high net worth investors, it's a complement to a more sophisticated portfolio. Mm-hmm. And I think right across the industry, it was not as expected. But I think, you know, really it can make a great complementer to a more sophisticated solution. And I think some of the banks on this call will probably like to hear that news, where they're not going to be evolved out of the ecosystem overnight, that you know, it really falls in place. And one of the things that we've seen in developed markets as well is that a lot of wealth managers, due to regulatory costs, are actually moving out of the retail, moving more away from the retail market as the costs increase, and they're looking for less accounts, but bigger accounts. And I think right here we see robo advisors being able to come in there and actually fulfill a role, which is sorely needed.
That's wonderful. We're still all on the same track, and we're expecting the AUM to increase. And just back on Marie's point, because I just remember it, I was disappointed by the AUM growth, because I feel like the market, there's so much potential, it could grow faster. But also I am playing the devil's advocate today, so I have to be both sides. I'm left with Mehdi and Saad on the same point. And again, just really briefly, if you will, just your take on why AUM is slow on this region, if there is anything specific that wasn't already shared by the speakers. Mehdi, over to you.
Yeah, sure. So to complement what was already said, I think that also there is an angle of demographics. So if you look at the investors in the UAE and in the Gulf, GCC in general, you will see that you have two different population. You have the locals and the expats. So the locals have been used for the past 2 or 3 generations to have the savings and their pension taken care of by the government. And they invest, but they speculate. They invest in the stock markets. And if you look at the penetration of the retail local investors into the Saudi stock market or in the UAE stock market or Qatar or Kuwait, it is at similar levels that the ones you will get in Western countries or more developed, financially developed countries. But they don't have the culture of asset management. They go there for, I would say, a quick win. They enjoy basically the dopamine and the speculations and how it works, but they are not simply educated, or they are not properly encouraged to put risk controls on this. So this is something that I think going to change, especially that the market has dropped, as we have seen earlier. That's on the one hand. And when it comes to expats, most of the expats that live here in the region are saving into their home country, are buying houses first in their home country. And only after they bought their first or potentially their second home that they are looking to invest. And here they are comparing between what they are being offered back home and what they have here in the region. I'm thinking here about NRIs, for example, who are great investors in the Indian stock market while not living here. And indeed, the fact that we today exist and we can offer this kind of solutions helps move the dime. And we will catch up when it comes to AUMs with other players, and we are already seeing it. The last element, perhaps, is the regulations. Of course, regulation gives trust, but what we are lacking in our region is that each country has got its own regulatory framework. So, for example, FineMS, we start in the UAE, but we are going to Saudi, and we are getting the license in Saudi Arabia, and we need to do the same for all the 6 GCC countries. This is also, I would say, a barrier to entry and a barrier to develop these different robo advisors and digital wealth management.
That's a wonderful point. It's as if you were reading my mind, because that was the exact segue that I was going to go over to Saad with. And Saad, the lady and the gentleman here have been, hands-on into the market, and you're working to get your company in. And in fact, one of the audience wanted to see your take on the difficulty of setting up in the market. So do you think the AUM or the levels of growth are impacted because there's difficulty in terms of setting up and structuring and getting licensed?
I think there's 2 angles here. There's as all my colleagues mentioned in the call, there is the ecosystem, which needs, still it's immature and needs a lot of work from, whether it's from a regulatory perspective, enablement, whether it's from also product perspective. And now we're talking in Saudi Arabia, we only have 4 ETFs. We have 250 mutual funds, out of which they're all almost tailored towards equity. So there's a lot of lack of financial products from an ecosystem perspective. We have seen now a lot of enablement, such as funding, resources, sandboxing. So that's from an ecosystem perspective. It's very difficult to navigate through that ecosystem, given that if you look at the market dynamics, for example, in Saudi Arabia, from an insider, the 70% market share of the market concentrates on the top 5 players, the large 5 players. And if you see those 5 players, they're concentrating on high net worth individuals, all institutional investors. So they're controlling, there is a kind of a concentration within that segment. So the other point is, again, is the regulation. And the more we see flexibility, adaptability of new ideas, more towards data-friendly aspect, because, the more you have data, the more you have ideas, the more you have disruption. And what we are pushing for within the kind of regulatory framework is to have a really an open data source for for those fintech companies to really grow and have more access to data. So just to summarize, I think the difficulty that from insider perspective is the ecosystem is still immature. It needs a lot of time to get there, and we're getting there. And I agree with all of the audience. And then also the regulation needs to be adapt faster than the player. So we have seen actually entrepreneurs are running faster than the regulators, which actually we expect to be the opposite. Yeah.
That's lovely. Saad, I think it's really interesting to have you on board, not just because of that you represent one of the largest markets in the GCC, if not the largest market, but also because you give us the about to get into the market feel, which is very interesting, and it's actually picking up very well with the audience. I need to tell the panelists something. The amount of traction you're getting on the chat is very interesting, and there are questions being directed at each one of you with singularity. Stuff that you mentioned are raising very interesting questions, so I'm keeping it, and I know who I'm going to ask just in about a second. But I can't shift over to more generic questions before I ask one of the most pressing questions, in my opinion, right? Banks are currently digitally transforming. Most of the banks in the region. I mean, even in the GCC, they're a little bit behind, but everybody's starting now very aggressively. They're trying to go online. They're trying to develop the apps. They're trying to give them the access. They're trying to shift into all that sort of things. Now, my question coming to you, and I would like to start off as I always do with Miss Marie. Do we think that we can see Robo Advisors go head to head with banks? Can they, will they be able to compete with the backdrop that they are no longer competing with traditional banks, as in a branch and a bank and a teller? They're competing with a digitally transforming bank. So I would love to hear your take on that, please.
Yeah, thank you, Nuran. It's a great question. It's a matter of competition, but it's probably also a matter of collaboration. And I think we see both types of things happening, right? So collaboration, because, for example, some banks are acquiring Robo Advisors, but also banking networks crucially need digital tools, so robo advising tools, for their human advisors, which are not very well equipped. And that's something that we see also developing, for example, in Europe, where we see partnerships. So robo advisors developing a B2B activity, right, where they are targeting banking networks to offer the platforms and the digital tools that will not be offered to the retail client in the end, but to the human advisor that will use these tools to profile the client, to offer an optimal asset allocation, etc. So I see that both types of models can develop, and it's not necessarily a question of hard competition between the two models, but I think we'll see like more mixed solutions where the robo advising tools are also offered through the banking networks and through human advisors to the retail clients. So I would be happy to hear other panelists' opinion on that.
I really love when I have a panelist on my session who says we don't compete, we collaborate. I absolutely love that energy. Thank you so much, Marie, for that point. It literally made my day. Michelle, can we move over to you? And being the CEO of a very large Robo Advisor, could we see that the ambition of Robo Advisors would be to build a Robo Advisory and then a bank takes it over or purchases it? Or could we see the collaboration aspect being more pressing? Or are we competing?
I think you'll see a bit of everything. I think, again, if you go, I'll do what I did before. So if you fast forward 5 to 10 years, I think you'll have some digital wealth managers will be successful and independent, and will have probably also extended the range of services, maybe a little bit out of kind of a pure robo. You will have some that will have maybe kind of be purchased by banks, which is a way for the banks to kind of speed up their development. And you will have some banks that will have developed their own platforms that go into this direction autonomously from scratch. You also already have today, maybe that's a bit of a different business model, but you have a lot of what people call B2B Robo Advisors. So these are in practice software companies that build technology to be sold to the bank. So they are unregulated players. They don't talk to clients and simply sell their software to the banks. And so there is a lot of players that are actually trying to help the banks develop their infrastructure further. I think from our perspective as a standalone digital wealth manager that kind of offers its services directly to the end clients, I think obviously what we're trying to do is we're building a company that we think can stand on its own feet. We always have a very open mind on collaborating with the banks, with asset managers, and with kind of the ecosystem. So I'm not ruling out any potential strategic option in the future, but the idea is that I believe what we're building can stand on its own feet. We're now live in 5 markets, and I think there's going to be in different parts of the world several players that will go we will kind of continue to build with this logic.
That's wonderful. Thank you so much for that, Michelle. If I can move over again to Omar. Omar, your inputs on this point: competition, collaboration, or a hybrid?
It is a great question, and I think it really comes down to the individual bank as well. I think in our perspective, we will always interact with the ecosystem and need those services, but it's how banks particularly reposition themselves. Where the smart ones I've seen, we've seen are understanding that actually, rather than viewing fintechs as the biggest threat they've ever seen, the smart guys realized if with a piece of it repositioning, they can actually work with fintechs as the lifeboat to evolve, and maybe they take a different piece of the value chain, but in actual fact, the Robo Advisor can present great distribution. I mean, for example, we take a hybrid approach as well. So we have a human investment committee, and we make the investment decisions. We only invest in high quality funds. So essentially, we're a fund of funds. So a lot of the products that we utilize are from large banks. So they very often we are actually being approached by larger players, much larger players, who have high quality products that are understanding that working with a Robo Advisor can actually potentially really be very, very beneficial. They can access retail market, global retail market, and however, without the headache of dealing with thousands and thousands of retail investors. They only deal with us. So there is a model that really all sides benefit. And I think that's what we're going to see in the future for those parties that understand how to evolve. There will obviously be casualties. I'm not going to say everybody will survive, but I think it will be a different revenue model for the banks and a different revenue model for the Robo Advisors or fintechs. And if you're taking the perspective of a fintech, the proposition is really to specialize in what you're good at and concentrate on providing a very good user experience. And often is the case as the evolution goes forward, is different products will be brought onto the platform, inevitably, unless they're built in-house, which is very time-consuming and effective. Working with a partner such as a bank for insurance need or home loans, whatever it is, makes a lot of sense. So in that kind of scenario, all players can actually benefit, although in a different way as we have now.
Perfect. Mehdi, your contributions on this point, please. And if you would allow me, I'd like you to think about this question from this perspective of this side of the world, where banks have been the go-to for people putting their cash or people, parking money aside for weddings or education or whatever. With that perspective in mind, do you think that Robo Advisors would compete, or would it just not be able to keep up with those banks?
And to continue on what you have said, Nurhan, the banks also do something that Robo Advisors don't do. Banks lend. They lend for consumption, but they lend most importantly for mortgage. And therefore, they have a special relationship with their clients. But let me tell you how I see the collaboration between bank and Robo Advisors could be. For me, banks are large ships. They're very big. They cannot go into the tiny little beaches around the island to discover what's going there. And robo advisors, or I would say fintech in general, are like jet skis. They are small, tiny, and most importantly, they can change direction very fast. They can pivot. Pivot is ingrained in their DNA. So what happens is that not all the jet skis will reach and discover the treasure. Few will sink and few will get lost, but some will reach destination. And this is when the ship will see them and has a signal, and they will want to go into that direction, sometimes by itself, which is possible, but I don't see it happen in this region. From our discussion with the different banks, we don't see any bank that is willing to build by itself the product. They will either use software developers or work with an existing robo advisor. And this is how the collaboration comes as a natural play. Robo advisors, even with a couple of $1 billion, will not be as big as a major bank in the country which manages 10, 50, or even $80 billion. So it's a different scale when it comes to AUM. But at the same time, what we as a robo advisor or as digital wealth manager can do is to provide this kind of flexibility, this kind of personalization, this kind of hyper personalization that the banks might not be able to implement by themselves. And this is where the collaboration comes by itself. Lastly, to talk about the region, what I can tell you is that we are in discussion and we have been approached both by banks and by consulting firm working for banks that were willing to understand how we work and how we can work together. And if you look also at all the accelerators around the region, are scattered around the region, from UAE to KSA to Qatar, banks always have a seat, always have a board seat within these accelerators, because they want to understand and they want to see how they can encourage and profit from these fintechs in order to make themselves, I would say, more relevant and work with the different fintechs in order to be closer and serve better their clients.
So what I pick up from what you're saying, Mehdi, is we're already seeing the ships honing in. They're actually starting to strategize. They're having discussions and they're preparing, which is a very interesting point to hear. I do take Marie's point. My research did indicate that some of the internationals have already bought in or taken stakes in Robo Advisors. We're yet to see that in the region, but thank you for your inputs. Saad, I want to
shift. The small one, if I may add here, not the small ones, JP Morgan and UBS bought Robo Advisors in Europe.
Yeah, the larger internationals. That's very, very interesting. I'm very keen to see what's going to happen on our side of the world, to be honest. But thank you for that, Mehdi. Saad, I want to take the same question. I want to come to you. But it seems that most of the questions directed for you on the chat seem to edge towards regulation. So I hope you're happy to entertain a question, which says, would Robo Advisors be able to compete with banks, especially in Saudi Arabia, given the regulations? So we are aware that there are large banking institutions who've been in the kingdom for ages. They're licensed for pretty much everything. They're very heavily regulated by SAMA, correct? But they do get a lot of weight in the market. So given a robo advisor, if you agree with Mehdi's description that they are jet skis, how does that work with the regulation aspect?
Okay, first of all, I mostly agree with all those points. I see it as co-petition. So there are areas where robo advisors will collaborate with local banks, depending on the positioning of the banks, depending on the area of collaboration. And we have seen that, and we actually met with a lot of banks during our sandbox journey. They're very excited about this. And they think that we provide them a platform to access to a unserved segment. So we actually can help them to access to a retail segment that they have not been actually reaching. And we actually provide them this channel. And also we can collaborate in terms of pivoting into maybe providing more products, more banking products. Which is kind of an area for scale for robo advisors to go more into financial products, banking products. And there are areas where actually can compete together. And actually what we have seen is, from a regulation perspective, there is a lot of openness in terms of collaborating with local players, because at the end of the day, we are complementing the market We are complementing the ecosystem. We're not really fully competing as a Robo Advisors. So, but to be conscious for once we say competing, I think we need to be very careful when how do we position ourselves competing with those giants, because you're not gonna, compete with them. So you really need to position yourself in such a way that actually presents yourself as a more technology kind of friendly, promoting this awareness, promoting this, disruptive technology, promoting the easiness, the kind of the accessibility to the market. That's kind of my take on this question.
Thank you, Saad. That was a very interesting take. If I can ask or request my panelists to give me a green light to start addressing some of the questions in the chat, because I actually think they're very interesting. I know I like to follow, like I leave it to the end, but I feel that this is going to drive a very nice twist. Obviously, you have the full freedom as you would to reject a question or to turn it down. It's a full open, safe space here. So I will know if you don't want to answer, and I will move on to the next speaker. And obviously, I understand that the audience as well would be appreciative of your views either way. So I'm going to start with touching on the sensitive beast, i.e. being culture. And there were a lot of areas raised around the lack of trust that comes with Robo Advisors. There is a large segment, at least 5 of the views of the representative, they represent a good percentage, who said, can I trust them with all my hard-earned earnings, my household savings, my pension scheme, planning for the education of my children? I find it difficult to trust a machine. And again, I feel that if this conversation, like Michelle was referring to, would be happening in the US or Canada or whatever, may be different. So if I can please request you to put on your cultural Middle East, North African hats on, and we can take a round and discuss, can we see genuinely and really your views, especially because you run those companies, but knowing the markets that we work in, can Robo Advisors service this suite of clients that are sensitive towards their pension schemes? They're not ultra wealthy. They don't have the money to lose and remake. They just have hard earnings to take care after. So I feel like I want to shift it a little bit. Omar's been giving me a couple of very accommodating nods. So I'm going to start with you. And I would like to keep the disclaimer that if you feel like you don't want to answer, I totally understand. Just let me know. Omar.
Of course I'd answer, of course. I think it's a natural human instinct, particularly with, there's nothing more sensitive, I think, than people's hard-earned money. And I think one thing about the industry is there's always a misconception that fintechs need to earn that trust. And it's going to take time to earn that trust. And there's a number of factors that come into play. And I've touched on regulation before, but I can't underemphasize that enough, because that is a separate entity whose regulators have a very, very tough job. And it's very easy, there's very easy to criticize a regulator, but that tends to be incredibly unfair. One of their job is, yes, to ensure financial stability and protect the industry as a whole. But their number one role is to protect investors. So with correct regulation, and for us, being a pure 100% Islamic compliant house, it is the reason, one of the top reasons why we are based in Bahrain as one of the leading regulators in that space. And that creates a level of trust, because a fintech will, if you're cynical, will always say we're doing everything correctly. But with a regulator that is trusted by a country, and it's their regulator who has no vested interest at all to give a green card. In fact, good regulators are very critical, rightly so. They take a very progressive, we've seen in Bahrain, very progressive, but also very cautious. So that's a really interesting element, a very important element. The second element is really how transparent the provider is. So when we're talking about ours, we're very transparent on the fees, what will be paid. We're very transparent on where your money will go. It's very clear. On the Cocoa app, you can see where it is geographically, into which funds, which sectors, and that's really, really important for consumers. Information, whether they see it all the time, every day or not, it's there. And that is really very important to build that bridge of trust. It takes time. And then the third element that I would emphasize when I do talk to retail investors, and I love to hear this kind of feedback, this you know, what would hold you back? And there is this element of, well, what would happen if you disappeared? Would my money disappear? And I always answer the question is, well, in the unlikely event we disappeared, your money's safe. It's held in global custody banks. That's how the industry works. It's held by large entities that also hold money for governments, etc., etc. So. And that is a feature of our regulation, is that the money is ring fenced. It's not for us to completely control, and it is protected. And that is a really important thing to do. So it comes really down to giving the information, but also educating the population to be able to see, to ask the right questions, so that you can actually emphasize, no, we do things correctly. But yeah, building trust is a big deal. And rightly so.
Amr, you actually brought my attention to something very interesting. You spoke about the ring fencing and the regulation and all of that. And if these kind of information are made very public, and obviously you spoke about transparency of fees, if they were made very public in the sense, especially for an audience that is hesitant to put ahead the money that they earned and they saved, and maybe the only savings that they have, it would be very interesting to them to be able to know this kind of information.
Can I add something on this topic?
Yeah, I'm actually not going to call on names. If you want to add on the cultural aspect.
Yeah, no, so I agree 100% with everything Omar said, so I'm not going to repeat it. Maybe I'll add one. So I agree, on the need of transparency, the fact, kind of explaining where the money goes, and obviously the fact that as regulated players, there is a de facto, there's no player-specific risk, let's call it. But I think the one other important point that I always like to talk to investors about is the fact that but I think this is what most players in the industry will do, have built an incentive system that makes our incentives very aligned with the client. So if you have two options, and one option is you go to a sales guy or a relationship manager, and that person will get different amounts of money depending on what products they sell you, because the retrocession from the fund manager will be different. And so you never know whether fund A or fund B has been chosen for you by a relationship manager because, in fact, it's better for you for whatever reason, or it's because simply there was a promotion from the fund manager that particular month gave a higher retrocession, and therefore the person wants to make the bonus. So this is how currently banking works today, right? So that's your first option. The second option is, that the sales guy, or in this case, the Robo Advisor, actually makes exactly the same amount of money, whatever products you buy, because the only money they make it from you. So there's no other fee involved. The only fee that we make is the fee that our clients pay to us. So, it's very clear who's my client. And therefore, my only incentive is to give you the best product available. And I think aligning incentives is at the core of building trust. Because obviously, if my incentives are misaligned with yours, I may one day, for some reasons, not do the best that is for you. But if my incentives are aligned with you, I always will have the same incentive that you have. And I think this is core to the value proposition of anybody that wants to serve somebody. I'm actually shocked that it's still possible for financial institutions to receive retrocessions of different value from different players, because I think it just creates a very, very opaque system.
Yeah. With the changes of the regulations, we're hoping that transparency is going to bridge that, because I know that it's a very pressing problem, but we're seeing the EU and the US take really great strides on transparency regulations. But thank you for that, Michelle. I'm unsure if any of the other speakers want to contribute, or should I shift to the next question?
Yes, maybe just a quick point to say that trust is really multifaceted. And there are various dimensions of trust, and I think we raised several of them. So at the basic, you have this question of algorithmic aversion. People dislike algorithms. That's a basic brick of trust, so you can improve that. Then there are there is probably the regulation, all these conflicts of interest. I mean, that can be certainly improved through regulation, and we already had regulation, for example, in Europe going in that direction. So that's something that can also be solved, I think. And then there are also dimensions that are more complicated, like brand. A fintech is less trusted than a very big bank or that is settled since hundreds of years, and that's something that is probably more difficult to tackle, or that takes time, as was mentioned by Omar. And then there are all these cultural or demographic dimension of trust as well. For example, we at Amundi we had neither of these questions, because, for example, the Robo was proposed through the employer in employee savings plan, so we didn't have the problems of trust, but still we could we at least trust in a fintech or that kind of thing, or problems with regulation, but we still had people that didn't trust the service, and we noticed that women, for example, trust less Robo Advisors. Older people, as was already mentioned, also trust less the service, so there is a generational gap in that. So and we mentioned also a cultural dimension to that. So these are factors that will be more hard to tackle, or at least they will take time.
Wonderful points. And it's very impressive that an employee savings scheme has been completely taken over by Robo Advisor. That's a very interesting point. Again, here it's
No, just the last.
would be
Sorry,
quite much governmental. Yes, Saad, please.
sorry, last point that I would like to bring. So let's not also forget that those algorithm is created by a human being, and sophisticated human being, and does not mean that an actual robo will actually lead your investments. It's actually a human created those algorithms in a very scientific way that actually will take on your investment. Besides that, human actually have a cognitive and emotional kind of biases where those algorithms they don't. So they're actually very stable. They don't actually act as irrational as a human being.
I think as well that if I may intervene here, and so I agree with all what was said, and particularly on the last point, I think we have a problem of terminology. When you say Robo Advisor, it's a term that was coined back by journalists who wanted to go for sensationalism, and who said that we are in an age where robots are going to take control of your wealth. And this, what Saad is saying, is completely right. Those are not robots. Those are algorithms that for sometimes use mechanical capacity of calculation, sometimes use machine learning. But at the end of the day, they were made by human beings, and they remain under the control of human beings. I think, and that is how we position ourselves, algorithms are not here in order to govern your investments. They are here in order to implement fast, reactive, objective risk control, so as when the market heads in a direction that is against your risk appetite, it can correct it seamlessly in no time, based on the millions of data that a machine can treat and that human brain cannot. And this is what I think one of the ways for us to bridge that gap is to explain transparency, but explain exactly what the robo does. And last point is, I tell you something which is very fair, and it's something I've been in the financial markets for more than 20 years now. And when there is high tide, everybody does well. But when you have crises, when the stock market falls, as we're seeing today, this is where you see who is, excuse me the expression, who is naked and who is not. And in these times, this is where actually one should be very careful on the different performances that different asset managers, so the different brokers are bringing in. And this is what will ultimately help us consolidate and reinforce and strengthen our business model, which again is not giving your money to robots, but using algorithms in order to better control the risks that you are putting in your investments.
Very interesting. Thank you so much, Mehdi. We've got about 29 minutes to go. And in the chat, there were particular questions directed at particular speakers. So I'm just going to direct the question that is very specific to the speaker for them to address. There is a kind of a controversial question that was raised for you, Omar. I think it came around when you were mentioning that people can open accounts with around $100, and that, you know, there would be some sort of a segregation between higher net worth, like in terms of service provision. So the question actually is directed to you, saying, are you suggesting that those with higher net worth will receive different services on Robo Advisors? And the comment then continues to say, isn't that unfair treatment?
I saw that comment actually. In answer, absolutely not. The core of what we're doing, and I think that's really right across the industry, is that actually the complete reverse is true. Particularly with us, that a consumer that opens an account with us for $100 gains access to the same portfolio of high quality ETFs and mutual funds that are generally very inaccessible. They get the same access to same portfolios as someone who comes to us and opens up the same account in the same risk profile with $1 million or $10 million. We don't differentiate. We don't add a high level of service. In fact, it's a high level service, but it's a high level service for everybody. And that's one of the, I mean,
so
you know,
to clarify and to be very blunt, sorry to cut you off, to be very blunt, your platform or Robo Advisors do not discriminate on the level of wealth. Can we use that as a statement? Is it true?
You absolutely can. You absolutely can. And that's because we believe in it. We certainly wouldn't do that. Ethics drives everything that we do. And we understand that, you know, consumers have different levels of wealth, but they are at different stages of their life cycle, different stages of their journey. And our core, we don't, you know, as a Robo Advisor or digital wealth manager, nobody's locked in with us. The consumer is effectively king and in the center of what we do. If we aren't doing a good job, we will lose consumers. So at all times, we must offer the best we can right across the industry. And touching on the fees as well, like all Robo Advisors, we generate fees, management fees based on AUM. So for us, there is no incentive at all to direct an investor between one set of a portfolio or another one. We get paid where the money is as a whole. So and I think that's really important to align those interests.
It's an inclusive solution. We don't. Perfect. Thank you, Omar. Michelle, there's a question that was directed straight at you. You made a couple of references around the region being, you know, the age groups. A lot of them are much younger, and you also referenced ultra net high worth clients. So the question that was directed to you was, if somebody's young, did they have to wait until they were wealthy so they can start entering with a Robo Advisor to invest their money? So is it age works against the person if they're not wealthy?
So this is for me, right?
Yep.
So no, actually quite the opposite, meaning that I'll give you the Stashaway example, but I heard Omar talking about minimum $100. So we are able to, so we have no minimum balance. You can start with $1. At $10, we actually are able to build a diversified portfolios across 10 asset classes. And the reason we're able to do that is we manage fractional shares down to 4 decimal points. So if you invest $10, you're going to have 10% on North American equities, 5% on inflation-linked bonds, 10% in gold, et cetera, et cetera. Super diversified portfolio for $10. Now, obviously, you're probably not going to retire with $10. So the reason we do that is not because we want people to have $10, $15, $20 accounts, but it's for two reasons. One is that we want to make it very easy to try. You know, it's free withdrawals, no lockups, and you can start with as much as you want. And for some people, a low amount is $10. For some people, a low amount is $1,000. For some people, a low amount is $50,000, depending on how wealthy you are, right? So we make it very easy. The second thing is that we believe and we encourage dollar cost averaging. So we tell people, hey, invest on a monthly basis. Don't try, or a weekly if you want. Don't try to time the market. And if you are, very young and maybe, your salary is an initial salary and you only are able to save a few, $100, $200 a month, $300 a month, if you didn't have the fractionalization that we do, you wouldn't be able investing $200 a month to actually have always a diversified portfolio. Right. Because, if you want to buy SPY, which is the largest S&P 500 ETF, one ETF costs $350 or $400. And so you would be able to only buy that every month. You wouldn't be able to also buy bonds and real estate and gold, etc. So, so to answer your question, quite the opposite. I think players like Stashaway and similar actually allow people to start their investing journey very early. And by the way, starting early plays to your advantage because of compound interest. The money, the returns you make early on in your life, when you are 25, 27, 30, 32, actually will generate a lot of money in the coming years as they continue to kind of generate additional returns. I wish I knew that when I was 23.
So if someone's young and they have a very minimal investment amount, they can set up account, they can go in, provided that they're legal, of course, and they don't need a guardian. They can go in
and
they
be more than 18. Yeah. In our case, there needs to be more. Yeah, there needs to be legal. Yeah.
Right. So they go in, set up an account, invest with a no minimum, and then the kind of dollar cost averaging that you suggested, but there's nothing to stop them. That is a wonderful point. Thank you so much. I'm conscious I have a lot of questions, so I'm just taking my tour. Maria, I'm making my way over to you. There are a couple of questions, but I wanted to take the one that was initially suggested when you were covering. There was a question that came to you to say, how do we see that ESG and, the kind of awareness coming on sustainability impact the realm of robo advising and robo investing?
That's a really great question. In Europe, you know that robo advisors are under a regulation called the MiFID, and the regulators, the European regulators, are currently revising the framework to take into account ESG considerations. So MiFID is requiring that there is a suitability assessment, so that we are asking about the profile of the client and on the financial aspects so far. But now on, I mean, the regulation is under discussion, but we will have also to add questions in that suitability assessment on ESG preferences in order to then fit the client's needs in terms of ESG preferences with the best funds, ESG funds, and fit these preferences. So I think that's something very important going forward, and certainly an era of development of robo advisors. So many robo advisors are working in that direction as well, to offer ESG products and fit the needs of clients by making the appropriate choice of funds.
Thank you, Marie. Thank you so much for that. Mehdi, I'm moving over to you, and it was a very specific question. When you were speaking about customization and how your portfolios get customized with long-short strategies and the suggestions you were suggesting, there was a question that came over to you to say, can the robo-advisor, I'll take myself as an example to make the question more clear. Can the robo advisor understand my circumstance, understand my goals, and then set up a portfolio that is very specific to Nurhan or to Marie or to Mehdi? Or are there a couple of like preset portfolios and plants us in depending on a questionnaire?
So very good question. So the answer is, if you have several dozen $1 million, you will have a human being in a private bank who's will be take care of this 100%. But if you have not, then in today's world, you don't have this opportunity. So the solution comes through technology. And here, what I want to say is that, just use the example of Netflix. So when you watch a movie, there is one copy of the movie, but you have different people watching it at the same time in different languages, in different subtitles. Some people are going to put a stop here. So you can customize your viewing experience. And this is possible because of the technology that Netflix is using. We use a similar technology that will allow us, indeed, we as human beings, to strategically build a portfolio with some specific guidelines within which the algorithm and the robo advisors that has learned your personality, that understands how you react in this situation or that situation, Nurhan having a different behavior than Marie, for example, and it will adapt and build and actively rebalance Nurhan's portfolio in a way that is different from Marie's portfolio. And we're able to do this because, technically speaking, we don't aggregate our clients in one single portfolio. We build ex nihilo a portfolio for each of our clients for sizes that could be just a couple of $1,000s. In other words, when we have Mary and Nurhan investing at the same time in the same portfolio, actually there will be 2 copies, one for Nurhan and one for Mary, and each of these copies will have risk controls. We can use the image of a thermometer that will make sure that each of these portfolios is at the exact temperature that Nurhan wants and the exact temperature that Mary wants, etc., etc.
So we actually had a couple of really important takeaways, I believe. No minimums, fair treatment across all, kind of a very nice personalization, customization, ESG considerations taken into place. And there was a question directed to you particularly, Saad, and I think it's very interesting that most of the audience understands you're in the sandbox. So a couple of questions came in to say, what was the hardest thing, or what is the hardest thing you're facing setting up a company in the sandbox? They seem to want to know, I'm not sure, maybe they want to open their own firms, but like they want to know what was the most challenging part.
Okay, so if it's from a sandbox perspective, I think really it wasn't really that major challenge. But I think going forward to operate or to go to a market, such a new market like Saudi Arabia, I think one of the biggest responsibility that we're facing is really to promote awareness and education for financial planning and savings, as all my colleagues mentioned. And that's really put a lot of responsibility on us, because we need to be the pioneer, and we're expected to be the pioneer in this market, to promote that education and to promote that awareness. Giving in such a young age population as in Saudi Arabia, and unfortunately very low financial literacy, that put us into the spot, and that's really a major challenge and also an opportunity for us. And that what entails is really, if you think about it, all Robo Advisors suffers from high cost of acquisition of a client. What that means is, I think that put it more in a compound way, because not only we need to just think about acquiring clients, but I think we need to develop that awareness in order to achieve that objective. I think that one of the biggest challenge. The second challenge is, of course, we talked about regulation, and they need to be more front running the technology companies. They should be running as fast, or actually faster than those disruptive fintech companies, so we can catch up down in the market at a later stage. So I think the ecosystem also needs to be more. We need to look at it in Saudi Arabia in a more constructive way. We need more financial product. We need more risk management product. For example, derivatives, ETFs, all those things. It really makes the financial market or financial ecosystem more efficient. Finally, I think that the last challenge that I think we were facing during the sandbox is really to convince the stakeholders in the ecosystem, the authorized persons who's already licensed to partner with us. That was one of the major challenges, to be honest, because not only we have to explain to them the technology, but also we have to tell them that, by the way, this is where everyone is going. This is where the future is. So that's actually put a lot of efforts from our side to promote that idea or that technology in the region.
Wonderful, Saad. Thank you so much for that, and for responding to the question. I've got still a couple more. I'm conscious that I'm running very, very short on time, but I want to make sure we cover all the questions. Michelle, I'm going to circle back to you. And there's a question that says, what if somebody's just new to the market? This is too much to take in. I want to get onto Robo Advisor. It's just new. It's just hard. I'm not sure where to start. If you can give a piece of advice, what can people do? Super simple. Without suggesting any particular platforms, like what would you think they would do if they were just brand new?
I mean, the platforms like ours are designed to help, like, to be very simple to be used. So, you just pick a platform. Obviously, I have a recommended one, but I'm not going to name it. No, jokes aside. So find a way to pick a platform. Again, don't listen to me. And then if the platform is a good one, it should be extremely easy to set up an account. It should be extremely easy to understand. For instance, in our case, we have multiple risk. We have multiple product, and within the core product, we have multiple risk levels. It should be extremely easy to understand which product is kind of the one to start, and which risk level should be right for you. In the case, somebody earlier I saw was talking about the difference between investing for retirement, investing for your kids' education, etc. For instance, in the Stashaway case, and I'm assuming in others as well, we have a goal-based investing option where you can. That's super simple, right? You say, look, I want to save money because I want to retire. The tool asks you, when do you want to retire? How old are you? When do you want to retire? Etc. And there is actually, it helps you understand how much money you need, and it will recommend you an amount to invest on a monthly basis, together with also the right risk level. Similarly, if you actually decide to go for, I want to kind of send my kids to university, similar logic, like, the platform will help you understand how much money you need, etc., etc. So, short answer to your question is, platforms like these ones are designed to make it extremely easy for somebody to join. Now, what I always like to say is that you can invest with Stashaway, for instance, even if you don't know what an ETF is, even if you don't know what equity means or bonds mean. Like, you really need very, 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 very little knowledge. But if you are a sophisticated investor, you will actually find a lot of information. You will actually be able to dig quite deep and understand, the intricacies of the asset allocation model, for instance. But the challenge here is keeping the platform simple while offering a sophisticated product, which is what we try to do.
So ideally, it's a login, explore, and you should be able to get through. If not, you can refer to one of the available literacy academies, and I know you posted the link there to get some information on products.
In our case. Yes, but in our, then maybe one more thing. I'll talk about Stashaway, but I'm assuming that there's going to be. I'll talk about Stashaway just because I know what I'm talking about. So you can also always talk to somebody. So we have a phone number, and we pick up the phone in less than 8 seconds. There is embedded in the app a WhatsApp button. You click there, and you can chat with a real human on WhatsApp. Right. So if you get stuck somewhere in the process, you pick up the phone, you speak to somebody, and again, 8 seconds we pick up the phone. Try calling a bank. And see how long it takes, or you can WhatsApp and have a conversation. So if you want,
so there is support,
you're always going to be able to find it, and it's never going to be a bot. You're always going to talk to a human.
Oh, fantastic! Excellent support. Michelle, there's a question for you, and it actually comes from the CEO of Fintech Robos. He says, "How is the take-up on tour income and dividend funds compared to the regular capital appreciation funds that you offer? Do mass savers understand these fund objectives?"
So in general, obviously, the bulk of our AUM tends to go for our kind of we call it core portfolio, which is what Ibrahim calls the regular capital appreciation fund. So the bulk goes there. But we had some good take up on our income portfolios. Well, we only have it live in Singapore, the income fund. So we haven't actually launched it in the other 4 markets. But it has been quite successful as well. It's a very Singaporean focused fund, which is the reason why. So it's a Singaporean exposure in Singapore dollars, which is the reason why we haven't exported it to other regions.
Interesting. Thank you so much. Mehdi, there's a question for you, and I think you're going to like this one, knowing your background. Do you want to say something before I ask you the interesting question?
Yeah, I just want to say that when it comes to the dividend or the income generating funds, our solution was a little bit different than the one of Stashaway, which is to say that actually, do you really need monthly income of a specified size, or do you want to withdraw whenever you want, any income that you want at any given point in time? So, and our view was to basically reinvest all the dividends, reinvest all the coupons into the same fund, so as it keeps on growing, and you will be allowed for 0 fee to exit partially and to take the amount that you need for that particular month, for that particular purchase that you want. So we do not impose on you, we do not force you at the beginning to choose to go straight for income, but we give you the flexibility to withdraw partially at any point in time to satisfy your needs of that particular moment.
Interesting. Okay, can I ask you my very interesting question? It's not my interesting question, it's on the chat, but so excuse me, there is a question that says, does it look super automated on the surface, but there is a ton of manual work going on in the background?
Yeah, so I tell you something. We built Find a Maze with the view that whatever can be done by the machine, for which there is no need for a human being, should be done by the machine. I'll give you an example also, a more detailed example. Usually for an asset management firm, and here Mario can confirm this to us, or for a traditional asset management, or even for a bank, you have to have something like 20% of your workforce that works in the back office, meaning that will confirm the trade, that will reconcile them, etc., etc. We think that this function is doomed and it will disappear. And what you have done finally is that we build a system that requires 0% of workforce into the back office functions. In other words, all the system works smoothly, where we have our machine confirming the investment to each client and sending the orders to the market direct to the machine of the broker, receiving the answer, taking all the confirmation, splitting them among different portfolios, and the email is sent automatically to the client. When the client clicks on it, he goes straight to his dashboard and he will see his portfolio done real time. We do automated rebalancing, but this rebalancing comes to the investment committee, which usually accept all of them and sometimes may have a different digression and may not invest them all. So it depends on what we want to achieve. If it is just confirming orders, machine can do it very well. If it is actively taking decisions within boundaries that are defined by the human being, yes. Would human beings, investment committee, always have the upper hand on the machine? The answer is yes. So 100% automated, no, but manual and human only for the parts where we are as human beings are better than the machine.
So the human intervention comes in the aspects of decision making, not the kind of deal confirmation, back entry confirmations, that sort of thing, where we see in banks. So the back office function is removed and that's automated. Is that the correct understanding?
Yes, that is correct. And hence we save a lot of costs, and hence we're able to offer, we share these profits, or we give it back to our clients by offering them a very low fees.
Fantastic. I'm conscious that we are speeding with time. I'm just going to try to fit in the last couple of questions. Marie, this one is for you. Are we seeing Robo Advisors including cryptos and NFTs as part of their portfolios, or they're just going for standard asset classes?
Yes, it's a great question. Indeed, yes, there are a lot of robo advisors that are specialized in cryptocurrencies, and there is a huge demand for that. So far, the two worlds remained a little bit separated, but I think it's going to change. And for example, Betterment acquired recently a crypto robo advisors, Makara. So we see now there will be more interactions between the traditional financial world and the pure crypto world. So definitively, yes, there is demand for that. So of course, we'll need to be very careful because the cryptocurrency world is a very risky world. So if you want to design an asset allocation, I did some research a few years ago on that, including cryptocurrencies. You need to have a very small part of it dedicated to cryptocurrencies, which are very, very risky. But yes, that's probably an era under development.
Yeah, you shared the comments about riskiness in a very, very apt week. I think the crypto holders or the investors are actually having a not so great week over the week and a half. So it comes very timely, Marie. All right.
If I can end on this, Norhan, very quickly, I would even go the other way and say, if you want to invest crypto, you should do it within Robo Advisors or within risk controls, because they are highly volatile, and therefore what you want is to have somebody, not a human being, but a machine that is able to rebalance and to basically reduce the sale when the cryptos are losing, and potentially increase it when it feels that it's the right direction. So I would even go further than that and say, yes, invest in crypto in Robo Advisor that can offer this kind of investments.
I think it's very interesting you made this point, because a lot of the crypto investors that I've been speaking to over the last week and a half, they have gone on long only crypto investments, right? And that was the reason why they've been having a terrible time. It wasn't like a hedge strategy, or they weren't open to other ideas. So that was a very interesting addition. Nehdi, thank you for that. I have just about 3 minutes. I want to say that I had an absolutely wonderful time over the last 2 hours. Your brains are gems, touch wood. I'm seeing a very nice engagement. There is such a beautiful vibe going across, knowing that the audience didn't even know that each one of you is speaking from another side of the world, or another country altogether. Thank you for being with me, and thank you for honoring me by moderating this very discussion with you this morning. And as I always like to end any session that I moderate, I think people want to hear from you, not from me. So I'm going to take the last 2 minutes with a round across the room. You could take your 30 seconds to share one last idea, one last thought, one last piece of advice or a tip. You name it, the floor is yours. We'll close with you. Michelle, we'll start with you.
Thank you. Given where we are in terms of market situation, I guess my piece of advice for the 20 remaining seconds would be to not pull back from the markets right now, but rather use tools that enable you to continue investing, dollar cost averaging through the ups and downs, because those investments are the one that actually will 10 years from now reap the biggest rewards.
Stay invested. Marie.
I would keep 2 messages: keep human in the loop, so human in control, and ESG, which is a really hot topic where Robo Advisors need to make progress.
Okay, so we want more investor awareness and obviously more human contact. Mehdi, with you?
Yes, but also technology is our friend, risk controls are our friends, and this is what we can use technology for. And also, don't forget, on the same Robo Advisor, the same platform, you can also have access to, as Mary mentioned, crypto, but also to private equity.
Fantastic. Saad, what about you?
My final take here is, don't forget that algorithm is created by a human being, so they are made here to help us to make it like the execution of wealth management more efficient, smart, and consistent.
Fantastic. Amar, can we close with you?
Of course. I think my final message is evolution is really the center of the game, both for consumers and what fintechs can deliver. We need to continue to deliver. And I think market corrections are good in some ways, because it shows how a good fintech can downside protect consumers' wealth. And that's what we're talking about, long-term growth.
Long-term growth, stay invested, ESG. Ladies and gentlemen, the session was absolutely stunning, at least for me. Thank you for making the time this morning. Thank you for your wonderful energy and the kind love that you've given out this morning. It's exactly 12 p.m. Bahrain time, so we're on time, we're on spot. Have a beautiful rest of the day, and also some other time. Take care.
Thank you.
Thank you. Thank you so much.
Bye-bye.
Thank you all for tuning in. All the session recording will be available on the fintech Robo's website. And thank you to our panelists for this amazing and important discussion.
Thank you.
Thank you.
Thank you. Thank you very much.
Thank you.
Thank you, Kawthar.